Welcome back to Market on Close. Stocks are rallying enough to push the VIX downward after creeping higher the last couple months despite even higher stock prices. Joining us from CBOE Global Markets, Rob Hocking is the Senior Vice President, Global Head of Product Innovation. Great to have you here, Rob.
Thanks for having me, Oliver.
Okay, so let's first kind of start with the year and kind of the backdrop here. VIX has kind of been creeping the last couple months.
Yep.
The stocks have been going higher. That just happens sometimes, but at what point does it get interesting?
I think it's getting interesting right now. I think it's interesting just because of the global and macro outlook. So options usage has been increasing at a fast rate. I think people are getting very comfortable with using options and the whole concept of defining their risk or defining their outcome. You've seen record volumes in SPX. I think we're averaging close to 3.3 million contracts a day in SPX.
Wow.
And so, that just continues to grow. It's almost like, no pun intended on February 2nd. It's almost like Groundhog Day. We just keep hitting new records each day.
And that's even compared to COVID trading heyday.
Correct.
A lot of that was, I guess, stock specific.
Yeah, a lot of that was more, I would say, in the single name business.
Okay.
The index space, though, I think continues to keep making records. A lot of that has been driven by just new product innovation. About 18 months ago, a little over 18 months ago, we launched Tuesday, Thursdays in SPX. Expiries now, you could trade every day of the week. And that really was a huge catalyst to options growth. Investors could now make bets and hedge risk each and every single day. Think of it as buying daily, insurance contracts. And that's really been a huge catalyst. Zero DTE, as it's being referred to, makes up, call it just under 50% of SPX volume these days.
Oh, wow. Didn't realize it was up to half the entire SPX volume.
Yep.
I've noticed also there's a lot of ETFs and stuff now where people are able to find a way to use zero day or just generally using options. There's been a lot of coverage strategies, et cetera.
Yeah,
and I imagine that brings a lot of demand.
Yeah, a lot of growth in that space where you keep continually seeing new ETF wrappers using that kind of overwriting strategy. There's some put overwrites, there's some call overwrites. But yeah, for investors that want to take advantage of that overlay but maybe don't want to do it themselves, a lot of that ETF space has been super popular.
Does the index options trading generally correlate with higher indexes, or do the two move independently? If stocks keep going up and up to people generally, then you see options volume increase too?
No, I think it can somewhat be independent. It's more the style of options trading. I think right now you're seeing a heavy weight towards call buying. And a lot of that is just because I think people are trying to take advantage of upside movement in a lot of these indices, but don't necessarily want to be long the index itself. So you can kind of use that element of leverage that options provide. And that's been a huge driver. It's why we're at 1 year lows right now in that put call ratio that we track. Generally, puts out trade calls, that whole idea that options are used for insurance. But there's been a big increase in call buying as of late because I think people, S&P's trading close to 5,000. People are a little nervous. There's a lot of things on the horizon. It's an election year, all of those types of things making the market nervous. Well, I can use a call to get some of that upside exposure without necessarily having, all of the downside of owning that underlying itself.
That reminds me a little bit, not quite as frothy and chaotic as during COVID, but it does remind me when you've got the asset price, underlying asset going up, and then the vol of the asset going up as well. So maybe that's why we've got VIX up off the lows the last couple months. Because during COVID, it was like the stocks. The stocks would go ballistic so big.
That's right.
And then the implied vol would go up with them.
That's right. Yeah, and that's a huge driver. I would agree with you to that kind of implied vol. Even with up markets with vol higher, a lot of that can be driven off of that.
All right, so things are getting a little bit kind of frothy where people are using the options more kind of almost as leverage than hedging to the downside.
Yeah, I mean, we still see both. Don't get me wrong. Puts still do outweigh calls. It's just we've been seeing a lot more of that call volume as the market's been up here at all-time highs.
Okay. You guys have some new stuff coming out. Seems like more of an international bent with the MSCI indexes. What's that going to include?
That's right. Yeah, we're excited about this. It just keeps expanding our product set. So we're going to launch options on 3 different MSCI indices. MSCI ACWI, MSCI World, and MSCI US. We think, especially in the World and ACWI situation, where it gives US investors a great vehicle into international or global investing without having to leave the US. So we're excited. We're going to be launching those here shortly, and I think it'll just give investors some new diversification options that they can put in their portfolio.
Okay, March 18th?
Correct.
All right, March 18th, so we get 1, 2, 3, 5 new?
So we have 3 new option products that'll launch March 18th. We've launched recently. We had 2 new vol indices that track both the MSCI EFA and emerging markets index options products. So vol indices, kind of like VIX.
Okay. So those are the other 2. All right. So you guys are busy putting new products out there, and the demand is very much there.
It keeps growing. I think people are just getting more and more comfortable using that. Getting comfortable using options as part of their portfolio.
All right. Great stuff, Rob. Thanks for the update.
Yeah. Thanks for having me.
Appreciate it, Rob Hocking, Senior Vice President and Global Head of Product Innovation at CBOE Global Markets, MSCI Index Options, coming March 18th.